Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 29th of July, 2023, and it's the weekly technical analysis for the Euro, the Cable, and the Aussie dollar for the first week of August. And across all these major pairs, the bearish retracement is still continuing with a slight pullback on Wednesday and early Thursday, but then after hitting resistance zones, it did continue to retrace lower. That's even after the ECB announcement on Thursday, which turned out to be very bearish for the euro, and that also pulled the cable lower as well. The FOMC announced the day before that and both of these central banks, they did increase rate by 25 basis points as expected, but apparently these were basically priced in already, and markets took advantage of selling off at the key resistance zones. Except for the Aussie dollar, it continued all the way lower on Friday as well compared to the other two, and on Friday it fell to the 62 pip retracement level, and it could be setting up for next Tuesday's RBA rate decision, which should be another increase. So next week, there's also the Bank of England to announce their rate decision, also an increase. So both of these are setting up for next week as well, and could be further bearish retracements next week for these two. So let's review what the major news drivers were for last week and look forward to this coming week's major news. So last week was all about the two major central banks, the FOMC and ECB, announcing their rate decision, where they did both increase by 25 basis points. And after their announcements, both the dollar dipped lower and the euro did a significant bearish retracement. And Australian CPI came out slightly lower than expected as well, which is could influence the RBA's decision next week, but they are expected to also increase rate by another 25 basis points. And the major uncertainty for the week was at the end of the week with the BOJ adjusting their yield curves, and that caused a lot of whipsaw, and it actually strengthened the Japanese yen initially. But by the end of the week, on Friday, we'll see charts where it managed to recover back, and yen continued to weaken. So this coming week will be the RBA's and BOE's turn, with their expectation to raise interest rate a further 25 basis points, and as well as the Bank of England, another 25 basis points as well. Now, the ECB did mention that they have not decided on when the next rate increase is going to be. So in September, it could be a pause, or there could be an increase, so we'll see. But similarly with the Federal Reserve, they also mentioned that from now on, they're switching to a data dependency. So we'll see how the data will appear for the next couple of months until their next meeting, and whether they will pause and whether they'll have concerns still on inflation. And just to close the week, on Friday, the PCE price index did come in exactly as forecasted, but this was a lower level already. So, but after that, the US dollar managed to recover from the weakened effects from the Federal Reserve, and also recovered from the weaker euro, took advantage of that, and managed to recover back up, as we'll see in the charts later on. So it's definitely was a very volatile week. This coming week, some minor news with the Eurozone CPI estimate, and also the US ISM manufacturing and services PMIs, and but the major one is going to be, apart from the RBA and BOE, the non-farm payroll report from the US. Forecast is at 200,000 jobs to be added versus actual of 209,000 the previous month. So it's still hovering around the 200,000 estimate. So this is going to be interesting next week, because we've got one more day for the end of the month, and we'll see what the impact is for that month, leading up to into August, with a couple of rate decisions and jobs numbers. All right, so it's still going to be another fairly volatile week, and to close with a significant news event as well. Okay, so let's move back to the analysis. Okay, let's begin with the euro dollar. And start of the week retracing lower, dropping on the Monday, and then falling into the next support zone and pausing before recovering on the Wednesday on news of the Federal Reserve's rate increase, and which was very much expected. And they are switched to a data-dependent outlook, so there's no confirmation of when the next rate hike is going to be, and it will be data-dependent. So the euro took advantage and climbed back up until it hit the resistance zone, and right at the announcement of the ECB on their rate hike, it's basically buy the rumors, sell the news type of structure, and it just tumbled all the way back down into the daily 55 EMA, below the key 1.110 support zone. And only on Friday it managed to recover somewhat, and climbing back up just above the 110 and above the just right at the swing high. Let's take a look on the weekly time frame as well. And still a bearish close and bearish candle, and it could be some follow through next week. And let's also take a look at the monthly candle, where there's only one more day left for the month, and it's a long upper wick. So there could be some pullback higher before it could be further consolidation, and because of this long wide range here. Go back to the daily time frame, and let's take a look on the 4-hour to see where the price ran up into the previous support, now resistance zone, and after hitting it right at the announcement, it just tumbled way down. And if we take a look on the 1-hour time frame, you can see this is at the time of the announcement, just 15 minutes earlier, and just straight down for that couple hours. So this zone is going to be resistance now. On 13 is going to be safe for now, and the next major resistance is going to be at 112. This is now also an interim resistance. With the swing high and the 110 area and interim support. With the next major support at the 786 with retracement, where it did almost hit it. And there is a level here where it almost hit as well. Okay, so let's see if it's able to push up and break out higher to test the at least the 111 level, and support is very key at the 110. If that is broken, this 109.30 area is going to be the next major support. Otherwise, if it breaks down, it's going to break through the 99 level and heading towards the 62 fib retracement. Now, if we can also use full fib retracement here, it has hit the 50 fib retracement, and if it does fall further, it's going to target the 62 fib retracement at the 108.80 area, which is possible, but we'll leave this fib here for now. All right, so very volatile week, or at least the last few days of the week. And let's compare this with the US dollar index to see whether the inverse correlation held as well. And here's the US dollar index. It did initially attempt to climb up and hit the interim resistance zone at the 101 until Tuesday and then Wednesday, where the FOMC announced their rate decision, it tumbled back down into support area and a 138 pip extension. But with the help of the ECB, where the euro just fell hard on the Thursday, that helped push the US dollar back up, and a strong bounce back across the 101 and into the resistance zone at this swing low. So it's the 101.50 area. And then pause as a doji on the Friday after hitting the daily 55 EMA. So now stuck between the 101 and the 55 EMA here. And if we take a look at the weekly time frame, it's still a bearish close. There could be further momentum upwards, could be limited by the previous bearish weekly candle. On the monthly time frame, it's still attempting to recover, and with a long lower wick now. See how much more it can recover just with one more day left for the month. So resistance is still at this swing low with an interim support now at the 101. And another support right at the 138 with extension with this previous swing low. And a major support is going to be at the round figure of 100. Okay, so it has this range to contend with, and immediate one is at the 101 support. So there could be just consolidation for the last day of the month, and may not be able to break out higher. And it could be support as well without hitting this level again. All right, so we'll see how this closes on Monday, and we'll have to check the monthly time frame. But the key news this week will be from the US with the non-farm payroll report, the jobs report, and to see how that's going to impact and influence the Federal Reserve for more data for their next meeting in September. Okay, let's move back to the other pairs. Let's move on to the cable, where you can see on Thursday, it also followed the euro down, but it did not reach the next key support, but it also didn't hit the 786 pip retracement, and just punched through the previous swing high, and then recovered on Friday, closed right there again. So it did start of the week climbing up and almost hitting the 130 round figure, and was rejected very quickly and fell along with the euro. So this is still a significant interim resistance. Could move this lower to the 131 now, and this is still interim support with the daily 55 rising, so that's a wider range of support now from the 127. On the weekly time frame, that closed as a doji right at the daily or weekly 200 EMA. On the weekly time frame, it's also a long upper wick. And this week, this Thursday, is the Bank of England's turn to announce their rate decision of another increase of 0.25%, moving up to the 5.25% area. So we'll see what the reaction is from that news and the press conference that follows. But there's already a clear resistance at 130. Could be further weakness, dipping lower towards the 786 retracement, and then perhaps the 62 FIB retracement area if it does break through this support zone at the 127. But if it does, then there could be a strong bounce from there. And this week is also influenced by the US non-farm payroll report on Friday. All right. So for the Aussie dollar, it did also attempt to recover back up from at the start of the week until it hit the 68 level and the resistance zone. And on Thursday, it also fell along with the euro against the US dollar. So the US dollar pushed up, and all the major pairs that are inversely correlated all suffered and fell back to 67. But however, on the Friday, it did not recover, just like euro and the cable, where it did continue to weaken further into the 62 FIB retracement. If we flip this over, the retracement, FIB retracement is at 62 FIB. And cut through the 50% FIB retracement support, key support here. So this is now going to be the interim support at the 62 FIB. This now is going to be an interim resistance. The 38 FIB, and the major resistance is now going to be at the 68 round figure. We can still leave this here at the swing high. And a major support at 66, because that's the looks like the neckline of this potential double top. So that's going to be a critical level. We can also add a trend line here. So this trend line needs to provide key support. Otherwise, if it breaks through, 66 may not hold, and it could just continue its way down lower to the next key support at 76, and worst case, perhaps all the way down to 65, but depends on how strong the US dollar is going to be next week. So there's a very critical area of support for the Aussie dollar, with the RBA rate decision coming up as well. And it is a dovish hike. They're expected to hike another 25 basis points to 4.35, but if it's a dovish one with no outlook for the next rate hike, then it could turn out to be a dovish rate hike, and it could also tumble down lower. So there's a important and a key support trend line here. And then it's also exposed to the non-farm payroll report on Friday. So very critical levels now for all the three major pairs, and we'll see how they'll respond to the US dollar price action for next week. Okay, so do check out my other videos on spot gold and dollar yen, which will also have a lot of volatility from last week. And have a safe week and a good trading week, and cheers for now.